Ethan and I were having an interesting conversation about his scaling up and how it had gone for the last 3 days, basically since summer started. And I started recording in the middle. So we're going to join this conversation in progress. But I think there's a lot of interesting stuff here. I'm going to mix in the videos of some of his trades, and you're going to see that it hasn't been easy. It's been a hot, dry summer so far, but I think there's a lot of value in this conversation. So let us know in the comments. Please like the video and subscribe and share with people who you think might get something out of it. Thanks a lot. What I'm thinking when you say this stuff is it your scaling that changed things, or is it regime change in the market?
Right. So, I mean, you have to be able to determine.
Yeah.
Or we could just talk about, difficulties of scaling and, why do you expect to struggle when you scale?
Yeah, that's actually the first thing that came to my mind is, why is scaling hard? We're talking about choosing a direction, so why does the quantity matter?
Because, you don't believe yourself anymore. You always sit there and say, if I make one bad, how do you know that everything I've been doing is for real? Now, if I'm wrong, it's going to hurt twice as much, let's say.
Yeah.
Right. And you can do something. It's a great way of demonstrating to yourself, do I have my rules set down?
Mm-hmm.
If you have your rules set down, then you're right, it doesn't make a difference. And obviously, 2 days can't teach you if you've got your rules set down or not. It does obviously take time to, get over the pressure.
Yeah.
Right. So, that the biggest thing is just the pressure, right? So, your entire, if it's not automated, your entire cognitive ability is biased. So, you end up missing parts of your setups. And, the long trade I took today, probably I ignored all the tails beforehand, on the top side, just because there was the current bar had a tail on the bottom side. So, it's very difficult to really just react from without pressure when you're not used to seeing your P&L spinning like that. So, as you get adjusted, then you have to make a decision. If you adjust, and you know that you adjust, and you're still getting screwed, then you have to, then you have to really evaluate. But the first days aren't such a big deal. It's not so unexpected. I mean, it's just, you kind of wish you could get lucky, but you never do.
So, did you take the same trade plan and just double the dollar quantity, or how did you actually do this?
Basically. And it's important also to note that it's not like I was crazy and instead of trading with $100 stop loss, you're dealing with $1,000, right? People in general talk about scaling slowly, which I agree with, but if your stop loss is 100 versus 200, that's not the biggest deal in the world.
Mm-hmm.
You know what I mean? You should obviously scale slowly. You should never go from trading not professional to professionally. When we say scale double, it means my stop is $200, not the biggest deal on the planet.
Okay, but wait, I just want to make sure I'm following here. You sized up your quantity, and
yeah, exactly.
the stop is bigger just because of the quantity.
Yeah, the stop is the same. It's the 5-minute candle trail for sure.
Okay. It's interesting that you talk about the psychological aspects of this when it's an automated trade plan. Why does it?
The entry isn't fully automated, right? I'm still manually selecting the entry.
Okay. So
I will unpause the trade plan when I believe the entry is showing up.
Okay, and you think that the awareness that you're double the size plays into when you actually click enter?
Well, I mean, I'll click unpause, right, so that the candle break will start working.
Yeah. Okay.
But yeah, that's the biggest thing with scaling is that you'll take a trade. I only lose $5 if I'm wrong. Okay, fine. So, then you'll lose $5. It's not a big deal. But the second that you're talking about losing $100, $200, you're at the fear factor is significantly more. So what ends up happening is that naturally you end up filtering out a lot of setups that you would have taken beforehand, right? So if you look at my first image that I sent you, or the second image, you can see I had a day where I made 6 trades.
Or are you talking about May 23rd? You took 6 trades before you had scaled up?
Right. Exactly. So the big benefit of scaling up is that you end up figuring out what do you actually think is good and what do you actually think is bad. Right? As long as you have some kind of confidence. And a big reason why I scaled up around that is I noticed I was willing to make 6 trades, but there wasn't enough pressure. You see what I'm saying? So, and, it's important to note that these are all still like really small stops. Like it's not like saying, "Oh, he's scaling up is the only way you can know that you trade." But just maintaining that kind of self pressure, because if you're doing something real, if you're just taking any setup that you see, you know that you're not doing enough to be able to really have a good grasp on, am I doing a good job or not? Am I choosing A+ setups? Am I filtering out? All that kind of stuff. So you scale to apply the pressure, because then you'll end up naturally mentally thinking, okay, well, there's a very big difference in taking a trade knowing that you'll lose $5 if you're wrong versus taking a trade knowing you'll lose $100 if you're wrong. So yeah, by increasing your stop, if you have your idea and you think your idea makes sense, increasing your stop is beneficial, because increasing your risk is beneficial, because you can continue to naturally build that filtering process that you wouldn't be taking if you're trading a smaller size.
Yeah.
And yeah, as I was saying before, we're not talking about coming home and saying you lost a month's salary. It's you're coming home and you're saying I lost $1,000 this whole week. That's not the biggest deal in the world, from an investing standpoint.
Right.
But you can, if you're well invested long term, you won't even notice that happened.
Yeah.
So just maintaining that pressure, and that pressure ends up forcing you to build a more conditioned rule set, because you'll be taking less trades, and the trades that you take, you'll really be thinking about them, versus if you're not, it's I might as well take anything. And then when you take anything, then as you continue to scale up, you don't remember really why you took those trades, right?
Yeah.
So there isn't a well thought out pressurized answer.
Interesting. So it's almost like larger trades are more valuable, both in the amount of money and the amount of impact it has on your trading experience. It's
right. And if I can't scale up, that means that I need to revisit something. That means that I missed something along the way.
Yeah. And really, it sounds like if you trade small, it's you get what you pay for. If you place small trades, you don't value them, and you don't value the lesson they teach the same way either.
Exactly. So that's the biggest thing, is you just always have to make sure that your stop hurts. So hopefully I'll have good results tomorrow. Now we can talk about it. And my current stop is going to be at there's probably $750 for losses, my minimum drawdown. So I'm sure we'll have another opportunity anyways.
So you're already expecting more losses?
No, I'm not expecting, but you blow out your account, because when you scale up and you don't know when to cut the pain.
Yeah.
So, and it's always easy to just continue to go and go and go without being defined. So whenever I scale up, I know, okay, this is how much I'm willing to risk before I say something's not working.
And is that a percentage of your account?
No, it's a dollar amount. If I was trading professionally, I'd like to make, let's say, $1,000 in a day, right?
Mm-hmm.
I'd like to, you know what I mean? It's always just keeping that. It's always about being able to keep that mental capacity that you're always one day away when things start working.
Yeah.
So if I end up down $1,000, okay, that's not such a big deal. So it's just about for myself maintaining that. Okay, and obviously it's relative to what I'm sizing. If it's if I lost $100, I scale it to a $200 stop. If I scaled up and if I lose $100, I'm done for it. Obviously you have to take into account what you're trading.
Yeah.
But based on the data that I've collected, losing $1,000 that I basically lost every day for a week to 2 weeks. That happens, and that's exactly what I'm trying to avoid.
Yeah.
And based on the fact that I literally just had a month straight green, not a month straight, 23 or 24 days.
Mm-hmm.
And there was a ton of breaks and all that kind of stuff, so I find it's 11 days. Okay,
yeah.
So, but just in terms of time, if something is going that well for that long and then something breaks, it requires reevaluation.
Right. So if that were to occur, what do? Do you go back to the previous size? Do you change your setup?
It depends. I'm keeping an intensive journal, so I go back and I say, was I taking good trades? If I was taking good trades and they weren't working, then that means there was an issue with the setup. If I was taking bad trades, then I scale back down to a previous size to just kind of get more of a mental ground.
Okay.
Yeah.
Okay. So it's too early to say right now, but you haven't hit your threshold where you have to reassess, but it's been 2 days and 2 days of losing. If you had to pick today, what would you say?
Today I chose. We talk a lot about wicks, right? So I chose a trade into a wiki top bars, and it's been and I chose the long because I got caught up in time frame continuity, this, and this, like all the things that you default to for safe thought processes.
Yeah.
Right? It's safe. Oh, it's an easy, simple, mechanical computation. Two up. There's no real thought processes going on, right? I watched every single time the price get to 378. I watched it get bid down like crazy. So why did I take the long trade? I just didn't go through the right process. And I should have taken the short trade. The short trade would have been fantastic. And then why didn't I take the next short trade? If you look at the chart, it ended up being a 313. Why didn't I take the next short trade? Because I was busy crying about my last, the trade I took 5 minutes ago.
Yeah.
So, that trade would have been worth $300, $400. And then 3 minutes later, or 3 bars later, another one. Right around 376 area, same price level. That one went down to 2 bars. Why did I take that trade? I was still not even at the screen.
Yeah.
So it's just about that. So if it was just based on today, the answer would be no. It was just the scaling and the pressure. I'm not handling it properly yet.
Okay.
So once again, it's not like I'm scaled way too much. It's like a $200 loss. It's really not the end of the world. You can easily make that all back in a second once you're a full-time trader, right? The point is that it's a new benchmark. It's a new place for me. It's a new pressure point for me. So
right.
It's not so much that I lost money and I can't handle the money I lost. It's more that I'm now on a new benchmark.
Yeah.
How can I handle this?
Right. It's just not quite comfortable yet.
Exactly.
Yeah.
So that's all it is.
Yeah. Okay. All right. Thanks.
Okay, sure.
See ya.
Okay. See ya.
Trade unafraid.